Good morning, everybody. It is November 15th, 2023, 8:45 a.m. Welcome back to another episode of the Market Open. Folks, we've got the Face Ripper rally looking like it's on momentum for a second consecutive day in a row. There's a lot we got to talk about, a lot that's going on in the markets right now. Number one thing before we get into anything is PPI data. We're going to discuss that. PPI data came in way better than expected on the monthly and the yearly. This comes a day after a headline CPI pushed the S&P up more than 2% yesterday from 440 to now in the pre-market's 450 because it came in at 3.2 versus 3.7%. As a result of that PPI data, which I honestly even forgot was coming out this morning because, CPI is like the main event and then PPI comes after. You've got Palantir hitting new 52-week highs in the pre-market. You've got Tesla at 240. Tesla was under 200 a couple of last week. Tesla was at 214 yesterday in the pre-market before we spiked up on CPI. You've got new all-time highs on a variety of companies. Big tech is pumping. PayPal is up another 0.69% in the pre-market. A lot of companies are very excited. NVIDIA hitting 498. NVIDIA has added $280 billion in market cap in the past 2 weeks. So we've got a lot of stocks pumping, a lot of companies continuing to do well, the market continuing to like what they're seeing in this data. And as a result of that, we're likely going to see potentially some more of a little bit of this rally continuing to go on. Ladies and gentlemen, we might have Santa Claus finally coming back to town a month before Christmas actually arrives. So let's get into it. We got a lot to talk about. Thank you all for being here. Trucker Rob, Jeremy, Joshua, Chris Patel, thank you for being in the chat. David Williamson, Tessa Best, Anthony, Hakoon, Broccoli, LP, SB Narwhal, Sethi Roth, Monty, Alex, Mikkel, Raul, Mr. Russo, Miami, Ren, Ray, Darkstar, Hexen, morning sexy people. Good morning to all you sexy people that probably have some very sexy bank accounts or brokerage accounts this morning. Peter, Felicia, Alex, Sam Chen, Iceman, JJ, Lang, Jason, Garcia, Ray. Garcia, you had the funniest meme yesterday. I've got to show the meme today. It was just hilarious. Kelly's a hater on the rings, but folks, I think the rings look nice. I think this is the new style we're doing for the Market Open. So we got the rings on, and we're gonna keep rocking the rings. Nice shirt. Thank you for saying nice shirt. Someone on the video yesterday commented, "Hey, where'd you get that shirt from? I really like it." And finally, someone acknowledged that the brand that I use, Apartment 9, is actually not that bad of a brand. I sent them a link. I was like, "Hey, you should check it out. They usually have sales." So anyway, let's get into it, folks. We got a market to discuss. Thank you all for being here. Blake Anderson, Bryant Robertson, Missy, Mikkel, Jeremy. Let's start with PPI. So PPI data came in way better than expected. For those that don't know what the PPI is the producer price index. What does that mean? Well, essentially it means how much producers are willing to pay for the things that they produce, which ultimately impacts what we have to pay, which is the consumer price index, which is what was yesterday. So obviously if the CPI comes down, which it came down pretty dramatically yesterday, 3.7 to 3.2, then the PPI should be coming down as well, because if we're paying less for our food or our energy, then that means the cost to produce that food or energy should also go down as well. Anthony Begley, thank you for the $5 super chat. Best part of waking up. That means the absolute world to me. This is literally the best part of my day as well. The rest of my day is incredibly boring. This is like super, super fun and getting to perform for you guys and show you all the market. So thank you all for being here as well. PPI, here we go. This is what we got. Came in lower on every metric across the board. So monthly, it came in at negative 0.5%. The market was expecting it to be positive by 0.1%. I mean, like that is a hell of a deceleration from what the market expected. So the market expected 0.1% higher. We went in negative 0.5%. Core was 0% month over month. The market expected it to be up 0.3%. That's lower than expectations. Year over year, the market expected 1.9% of a gain. We got 1.3%. That's lower than expected. And year over year core, the market expected a 2.7% gain in the amount of prices people pay for or producers pay to be able to produce different items. We came in at 2.4%, lower than 2.7. Again, lower than expectations. These PPI numbers, I think, have been the best numbers in the past couple of months. Last 2 months, it was similar to these numbers, but the delta between the expectation and the actual result we got wasn't as high. It was like barely within margins. Right now, I mean, look at the year over year, 1.9 versus 1.3. That's a pretty steep margin in terms of the decline from what the expectation was versus what the year over year was. And as a result of that PPI data came in a lot better than expected, which is really, really good in the context of getting inflation to come down. Mitch, thank you for being here. Kyle said, nice face. Thanks, Kyle. I appreciate you liking my face. So as a result of that, PPI data coming down is really, really good for the markets. Let's read from the actual report itself. The producer price index for final demand fell 0.5% in October, seasonally adjusted. The October decline is the largest decline in final demand prices since a 1.2% drop in April 20. Wow. What a statement. I didn't even know that. I'm reading that for the first time. This is why I think Tom Lee was expecting this kind of face ripper rally to start happening. The October decline is the largest decrease in final demand prices since April of 2020. And what happened in April 2020? The entire world shut down. And that's why we saw a massive decline. Then we printed a crap ton of money and, had inflation be what it was. And now we're getting back to normal and having that inflation start to come down. So, I think Jay Powell has to be happy about some of these results. There's no way Jay Powell can think that the market doesn't deserve to have a little bit of momentum because of this. The index for final demands, less foods, energy, and trade services advanced at 0.1% in October, the fifth consecutive rise. For the 12 months ended October, prices for final demand, less foods, energy, and trade services moved up 2.9%. Not bad at all. So PPI came in lower than expected, and as a result of that, equities are doing well. Let's check on the 10-year real quick, and then we're going to get into Palantir and see the price action there. 10-year is up just a little bit, but not too dramatically. Still at 4.4, which was the most important thing right now, 4.496. Yesterday, I think it was at like 4.443. So yesterday was down a little bit more, but remember that 10-year was at 5% not last week, 2 weeks ago. And as a result of that coming down, then that's really good, obviously, for the broader equity markets. June, thank you for being here. Other Amit Danger, thank you for being here. There's another guy who's a friend of the channel. For those that don't know, his name is Amit Patel. My name is Amit. Chris Patel's last name is Patel. And somehow we found a guy whose name is Amit Patel. And we met him in Vegas. It's just ridiculous. It's absolutely insane. But thank you for being here, sir. So let's go into Palantir. Let's discuss that for a little bit. We're obviously seeing some momentum there. I don't think we're at 52-week highs anymore on Palantir. We were like 20 minutes ago in the pre-market. Let's check right now if we're back there. Nvidia, by the way, $499. Nvidia's closing in on that $500, and some stats I saw yesterday, like adding $280 billion in market cap in the past couple of days is just incredible. It's just absolutely insane. So this is what we have on Palantir right now. We got $20.01. So we were at 2029 in the pre-markets just about 20 minutes before I decided to go live. And that was above the 2024 pre-market high that we hit yesterday. Now, the valuation on Palantir obviously is up there. I think we all understand that. Most objective shareholders can see the valuation's getting up there. However, in a face ripper rally, in a really bull rally, you're going to get upside momentum. Does that mean buy Palantir at 20 and start chasing? I would personally say no. I tend not to be a chaser. I've gotten to the point where I can drink Jack Daniels, honey, whiskey without chaser, because I'm not a chaser, right? So like I've evolved from chasing. And so I used to chase, but now I don't chase. This is the day you want to sit back and relax and look at some of your gains versus be like, I got to get in at $20 and like start a position, because that tends to lead to disappointment, right? Same thing for Tesla. Tesla's a little bit of a different situation, but also given the Tesla rally, I don't know if 240, you want to just jump right in. Tesla now hitting 240 in the pre-markets. Tesla was at 214 on Monday, now at 239, and it was at 198 or 197 a week ago. So this also is a lot of upside momentum. The question around Tesla, Palantir, etc., if you want to get in on these prices, which again I think is it's just tough given some of the recent moves, is do you think this market has more rally to continue? And I think that is the existential question that we have to figure out as a community, right? At 450 on the S&P 500, also incredibly important for our psychology. We are 9 points away. We were at 459 at the top at July 31st, 9 points away from that top. Some of these equities aren't the same price they were when we were at the top. So for example, SoFi was at $11.45 at the top. SoFi is right now at $7.60, and the S&P is very close to its top, right? So some of the equities have performed in line with the S&P 500. Other companies have been more depressed in terms of their price action. So it's really interesting to kind of wonder, do we think there's enough PPI and CPI, disinflation coming over the next couple of months to really warrant the market getting back to all-time highs, right? Because 478 was all-time high on the S&P 500. Don't forget, 478 was all-time high on the S&P 500. We're at 450. We're not that far away. And so the question becomes, does that momentum continue? And can we keep going from there? Chris Patel in the chat says PPI collapse means the companies cannot charge the insane prices to customers anymore, which again decreases the price consumers have to pay, which is ultimately good for the CPI. I mean, you saw some companies in 2023 just charge like 2022, ridiculous prices because their argument was like, well, like it's inflation, people will pay it. And that's not necessarily going to happen anymore. Consumers are not going to appreciate that as well. So companies are going to have to adjust. So as a result of that, that is the question, right? Do we think the market has more momentum? Again, if you're just joining, PPI came in much lower than expected. As a result of that, that is following a second consecutive day of good data we got from CPI yesterday. Palantir, $20.06 in the pre-market. The thing about Palantir that's so interesting, and this is, I have no idea what's going to happen. When the market opens, Palantir could either just blow past the 52-week high at 2024 because it did it in the pre-market. So there was enough demand side for like, I want to get more shares. People were like, we're putting in these orders. Or there might be enough selling pressure. I was talking to a couple people yesterday. One person I talked to said, I'm selling at 20. I'm just like, I've got my shares at like $15. I got to I'm taking my profits. There's like way too much risk for this bad boy to come back down. And like the street's giving me this number. I'm taking this number. Talk to another guy who's like, well, the company's probably always going to be overvalued. So at this point, I don't really care. I'm buying some more shares at 20. I have a decent margin of safety at $9 average. I can bump that up to a $10 average, but I want to get some more shares in because you don't know where the market's going. And this is the hard part about being an investor. If you've got a great average on Palantir, do you average up because you think there's a real face ripper rally coming? Or if you got a crappy average on Palantir and you want to take some gains because you think Palantir is going to come back down, do you take some profits and try to time it and get it in a different way? It's not the easiest thing in the world to do, but there's so many different perspectives. And obviously that's what makes a market. It's like yesterday when I made a joke in the chat and someone said that was bad. And the comment right underneath it was, that was actually pretty good. You got different perspectives. That's what ends up making a market. And so I have no idea at 9:30 how the market's going to react in the context of Palantir. Does it decide to just rip through or does it sell off? We'll see what happens, but at least in the pre-market, people are definitely excited for Palantir. Why are we talking about my girlfriend being AI in the chat? What is going on in the chat? Goodness gracious. Adam says $20 cover call strike is insane for the next few weeks. Assigned at 20, buyback 1950 with cash secured puts. You increase your shares and collect 50 cents in share premium both ways. Yeah, if you guys are interested in covered calls or cash secured put strategies, would highly recommend checking out Adam's channel. Because he's been making like, I think he's told me like $4,000 a week or something, just like playing the wheel on Palantir in particular. I want to share one thing before we get off the discussion of Palantir. I talked to an investment banker yesterday. So I have a really good friend named Sebastian, and Sebastian is one of my good friends. Oh, we got some SpaceX breaking news. Okay, let me do this real quick, then we'll get to the SpaceX breaking news. Sebastian is one of my good friends. He's an investment banker. I really trust his perspective. I mean, he understands numbers better than I think most people understand numbers, just in terms of how he runs this stuff. And so I said, look, do you think Palantir is overvalued at 20? He says if they grow revenues at 25% through 2030, margins go from 30% to about 35%. He's talking about operating income margins. Shares go from 2.2 to 3.5 billion. So that's about 7% annual dilution. And the PE multiple comes down to 60. Right now, the PE is, I think, at like 80. And you apply a 12% discount rate, then no, the fair value is actually $25. Palantir is undervalued if you take in those assumptions. Growing at 25% through 2030 would mean they get $10.5 billion of revenue in 2030. We saw Ted Marbury, one of the chief executives, on the call the other day or on LinkedIn say, the path to 10 billion doesn't seem as hard as the path to 1 billion was. And now U.S. commercial has passed 1 billion in terms of a TTM run rate. And so they would have to bring about 10.5 billion in revenue in 2030. The key is the revenue growth. He said you can change any other assumption like the dilution or the operating income and the margins, but really what matters is can they grow top line revenue at 25%? Right now they're at 17%. If you believe they can over the next 7 years, Palantir is undervalued. If you believe they can't on this, basis, there's a lot of other ways to value it. But if you believe they can't, then maybe it's a little expensive right now. And that's one thing I think everyone has to think about in the context of Palantir. So that's the Palantir news. We'll get to it again when the market opens. We got about 30 minutes till the market opens. Thank you everybody for being here. Palantir right now, $20.06. We hit all-time or 52-week highs about 20 minutes ago at $20.29. Let's move on to this quick breaking news on SpaceX. SpaceX discusses spinning off Starlink via IPO as soon as 2024. I think we kind of all knew this was happening. Elon has hinted to this a while ago. But this would be really exciting. I mean, if this ended up happening. Yeah, here's the news. So let me share the screen right here. Let's discuss a little bit of SpaceX. I mean, if Starlink was to IPO, I think a lot of people would be excited about that bad boy. A lot of people. Starlinks, I think they did 1.4 billion in revenue last year. Elon Musk owns SpaceX, is discussing an IPO for its fast-growing Starlink satellite business as soon as late 2024. To get ready, SpaceX has been moving the satellite unit's assets to a wholly owned subsidiary that would ultimately be spun off in an IPO. No final decisions have been made, and it's possible that SpaceX retains the unit. Wow, Bloomberg reporting that. If Elon Musk gets another company public, bro, this guy has Tesla. Oh my god. He obviously the rocket part of SpaceX, which is I think valued at 150 billion. Got Neuralink, Boring, Twitter. I mean, just this guy has to be the greatest entrepreneur of all time. I mean, if Starlink becomes its own company, SpaceX obviously its own company, and that, well, when it IPOs, we know it's going to do well. We know people are going to be excited. We know people want to own a piece of the future of the colonization of Mars, right? Like this, you just have to call him the greatest entrepreneur of all time. I think there's no denying it. I mean, how can someone manage 7 companies at this level? It's just insane. The guy made PayPal as well. And if he was running PayPal, I don't think PayPal would be moving the way it's moving recently, but goodness gracious, just absolutely insane. Absolutely incredible. By far. Yep, I would agree. By far. Absolutely by far. Okay, so that's Starlink. Growth Stock Wiz, thank you for being here. Let's move on to some other macro stuff that we got to discuss. Starlink stuff is interesting. Let's move on to let's move on to some of the portfolio changes I made yesterday, because I talked about it on Finance Junkie. Some of the people may not have seen it. I'm going to go through it quickly and then just show you guys the decisions I made. Obviously, this is on the market open. I'm pretty public with all my positions, and I'll let you know the logic behind it, and you guys can let me know any decisions you made as well. Then we'll talk about Enphase. We'll talk about beautiful, beautiful old Enphase that is at $90. If Enphase comes back to 100, bro, remember when I was on the plane to Vegas, guys? And my iPad had 2%. By the way, I got this new keyboard for the iPad. You guys see this shit? This thing is phenomenal. Look at this. Look at this Bluetooth keyboard. This is awesome. It's going to be great. I was on the airplane when Enphase crashed to like $72. And I had 2% on my iPad. And I was like, I have like 5 minutes to make as many jokes as I possibly can about this damn stock crashing. And like literally as I'm typing the tweets, the iPad dies. And I think I got out like 10 different tweets, just like shitting on Enphase. When I mean shitting on Enphase, I basically said, I'm going to Vegas. I'd rather bet on black than buy Enphase. Like that's the types of jokes I was doing. If Enphase comes back to 100, I mean, those jokes are not going to age that well, because that would be a hell of a recovery. Enphase right now at 92.40. It went to 72 a couple of weeks ago. I mean, shit, if it comes back to 100. Shit, my 2 shares in my Roth IRA are going to be doing well at that 124 average. Okay, let's see what I did on my portfolio, and then we'll discuss Enphase a little bit more. So, what did I do yesterday on my portfolio? Main thing is I sold 50% of my TFC contracts. So, you guys know I'm big into TFC. I had Jan 2025 call debit spreads at a 378 average, sold them at 399. So, I made about $1,100. I sold 45 of them. I have 46 that are left. The reason for this was quite simple. My logic was if TFC hits $45 by January 2025, I would 4x my 34 grand that I had in TFC. So it'd be like 130 grand. It would obviously be a lot of money. The problem is January 2025 is 14 months away, but I thought the odds of seeing 45 by then, giving some new banking regulations, general macro uncertainty, potential recession, yada, yada. I know it sounds crazy to say these things on day 2 of a face-ripping rally, but nonetheless, I think I've matured a lot since I was a younger investor, and I've seen more red than I've seen green, and I know that the red always comes, and so you want to be a little bit more cautious and prepared and do what you need to do. So the idea that we would get to $45 in the next 14 months, along with theta decay starting to happen within the next probably 7 or 8 months at a more extreme level, I didn't feel like the risk was worth it. So at that point, I looked at Jan 2026 calls. I get the same return. It's the same 4x that I'm looking for. That was the reason I got into these spreads in the first place. And I'm paying 0 premium for another year because they're actually cheaper than than the original calls I had. Now we'll see today how TFC performs, and maybe those go higher. Maybe they get cheaper over the next couple of days. I already got 16 of them yesterday, so I didn't put in all of the gains that I got yesterday into the 2026 calls. I only bought 16 of them, so about $3,000. But the January 2026 calls that I get 365 days extra of premium are priced incredibly attractively. They're cheaper than the January 2025 calls, and all I have to do is wait another year. And if I'm still correct on my thesis that TFC will go to 45, because I think TFC is ridiculously undervalued, I have another year to be right. So to me, this made all the sense in the world. I'm also thinking of just buying the stock given the 7% dividend and maybe we'll just purchase some stock versus old 2026 options. So the idea was, why did I get into the TFC call, right? Why did I choose to do this in May of 2023? The goal was, I want to 4x my money. I want some alpha, right? I don't write for the website, but I'm seeking alpha. And so I realized that, look, January 2025 is coming up, 14 months away. I don't want to risk being worried all of 2024 about 2025. What if I can just delay that for 2 years and not have to worry at all about 2024? Like, I can sleep like a baby, because even if 2024 shits the bed, I've still got another year for, the contracts to recover, even if it's bad. And so that was the logic behind that. Still kept 50% of it. The other move I made is SoFi. I got rid of all of my SoFi options for 2025, and I moved half of the money that I got from those gains. I made like a couple $1,000 yesterday off those options and put it into 2026. A little bit more out of the money than I wanted, but I have another year premium. So if it, I had 15, if I have 17, if it's 15, it'll probably be 17, 16, around that range. So that'll be fine. And so I moved it out as well. So what I did yesterday, what I took advantage of in the context of the rally, was moving a lot of the options I had going from 2025 into 2026 and just reallocating that capital. Same return. The SoFi options can 7x theoretically if SoFi gets to $17 by January 2026, buying a little bit more time. And so as a result of that, that is what I've done. Matt says, I've matured a lot, but my portfolio is 80% options. Okay, maybe I haven't matured that much, but at least I'm giving us some more time. Oh, wow. Must just confirm the Bloomberg Starlink IPO is fake. This is why you can't trust anybody, bro. Goodness gracious. Even me, sometimes, I'm reporting what I see on the news, so I'm not always right if the news is not right. Wow. Elon, okay, so Starlink's not IPOing in 2024, or at least not rumored to be doing that. Or I'm looking at Elon's tweets right now, or Elon's just saying that because he doesn't want to get any momentum built up. So there might be a little game he's playing there as well. But eventually SpaceX will IPO, and if it has Starlink in it, or if it doesn't have Starlink, SpaceX is going to do phenomenally well. Growth Stock Wiz, thank you for acknowledging my seeking alpha joke. It just means the world to me when people in the chat actually acknowledge the jokes. So thank you so much. Emil's lot. Me, Kevin, reporting fake news. So yeah, that's what I guess Elon sets us straight and we get it correct. All right, so those were the option changes I made. Let me know what you guys think, and let me also know what you guys did if you made any changes in your portfolio. Let's get a look at what's going on in the equity markets and see how some of these stocks are doing, and keep going from there. So let's pull up these charts. Let's also talk about Enphase and see what we got. Again, Tesla 240, Palantir 20 in the pre-markets, S&P 500 450. We're going down a little bit. S&P 500 actually at 451 about 20 minutes ago. So we're getting a little bit of relief. Tesla 239.90, Meta at 338, Meta another 52-week high. I was speaking to someone from Italy yesterday who has a pretty big position in Meta. And he was just telling me how much he's in love with Meta. I mean, like in terms of like the products, the services. He was using the Quest 3. He believes it's still he was trying to get me to buy it. I was like, dude, at 800 billion, it's hard for me to really buy it. But he was just like, there's no way that these guys just don't keep growing. And so I think Meta's a little expensive right now. If you're starting to initiate a position, it would be kind of tough for me to really be excited for it right now. But Meta continues to perform, and Meta shareholders have done phenomenally well over the past year. Palantir, $20.02 in the pre-market. Enphase, we'll talk about that in a second, 92.31. JP Morgan, 148. Bank of America, 29. TFC, 31.35, up 1.19% in the pre-market. SoFi up 7.48. It's flat. It was at 7.60 about 30 minutes ago. SoFi flat. And Amazon, 147. Amazon trying to inch to that 52-week high. Well, I think it hit the 52-week high in the pre-markets. Now it's just below that at 147.26 right now at 147.16. Another piece of news that came out this morning as well. Robinhood bumped up their APY to 5%. 5% from 4.9. I know it's not that big of a deal going from 4.9 to 5%, but psychologically, seeing that 5% number is really, really exciting. When you look at what you can get in other places like money market funds, etc. Here's a picture I want to show you guys. I was texting Chris about this morning. This is a feature Robinhood, I think, announced or put out like a couple of days ago. I just updated the app, so I found it. So maybe it's been out for a couple of weeks. But this is what they just put out. This right here is a option returns simulator. Now, I know it's not the most, I know there's option return simulators out there, in the market, but this thing is incredible. You can take your options and you can simulate. I'm going to show you guys an example how they will perform historically over time just by adjusting the price. So if I press stimulate my returns and I start moving that ticker higher and higher and higher. As you can see, these options. Oh, sorry, was I moving it lower? No, I'm moving it higher. Wait, why is it going? Oh, yeah. Okay. Got it. It makes sense. Okay. So as I move it higher and higher, you can literally see what your gains will look like. And it's on a time period, right? So these are $20 options on Robinhood. So if I move it all the way to 20 by January 25, you can see that return continue to go higher and higher and higher. And it's incredible. This is one of the most user-friendly, unique user experiences I've ever seen on an options product. I mean, it's absolutely incredible. So ultimately, I have 5,000 in these Robinhood options. If the stock gets to $20, it goes to 40,000, right? So like this $5,000 turns into 40,000 if Robinhood is $20 by January 2025. We'll see if that happens. But like the point is, why is this important for Robinhood? It incentivizes engaged users to keep investing. It allows them to track how their options are going to do. It has a really friendly user interface to just be like, oh, if this goes here, this will go here. Obviously, it's not 100% accurate because options are options, but it even shows you theta decay. I mean, one of the things that's most confusing on options is like how theta decay operates. And, people say it really starts happening aggressively 180 days before expiration, 90 days before expiration. This stimulator, you can literally move the price and see how Robinhood is calculating what they predict theta decay will be like on your options, which makes you better at exiting positions, better at getting into positions, better at putting more money into different positions, which means Robinhood's assets under custody continue to go up. I do not see any financial services product on the market that is that user-friendly with showcasing high-level derivative contracts, making it feel like a game as you're playing with it and seeing what the return could be like. And what that means is more people are going to put more money into Robinhood. People like me are never going to leave this product ever. And so, I mean, I'm very long Robinhood. That level of innovation is just insane to be able to see on the product. And I mean, that came out just a couple of days ago. Or at least it just updated for me a couple of days ago, and we're seeing that. So really good update on Robinhood, and definitely another reason to get excited, I think, for the company. Let's check on some other stocks as well. So you guys are saying Target in the chat. Let's go to TGT. Wow. Did Target have earnings? They're up 13%. I think Target had some earnings. Did Target have earnings? Why is Target? Yeah. Let's look at that. Let's look at their earnings. We should look at that for a sec. Oh my goodness. 13% on Target is not easy. Target's not one of those companies that move. I mean, Walmart, for context, in 2023, I think in like March, moved 10% because of bad earnings. And that was the first time they moved 10% in a decade. So Target, Walmart, these companies are not that easy to be moving 10% in a day. They're not like a growth stock. So let's look at their earnings, and then we'll actually talk about Enphase because I got to talk about Enphase. Okay, so let me share screen, and let's go there. I think he means simulator. Oh, I said stimulator. Oh, what am I thinking about? What's going on in my subconscious? I meant simulator, guys, not stimulator. Goodness, it's right underneath the contract. I don't know on the desktop, but underneath the contract on your phone, it'll say simulate. Yo, why do I keep saying stimulate? What am I thinking? Simulate my returns. You see that right there? Simulate my returns right underneath the contract. So it's on the phone. You should be able to see it. And if you're not, then update your app. Another person says Seeking Alpha joke was actually good, mate. Thank you, DJ Green. I appreciate it. There's unlike other people, there's some appreciation for the jokes. I appreciate it. All right, so Target. What do we got on Target? This is very important for the consumer. This is very important to understand where the consumer is going. Earnings per share, 210 versus 148. Goodness. Holy crap. What the hell did they do to get that EPS up that high? Revenue 25.4 versus 25.24 billion. And Target's been dealing with all the looting and the stealing and all that stuff. So even with that, which was their big concern like 5 months ago, they were like, look, we like too many people are stealing shit. And that was actually why their shares declined. Shares of the company rose more than 10%. They say we still have some same challenges. Shoppers aren't buying much more than the necessities. They're hungry for lower prices. And when they do make a purchase, they're postponing them. So the state of the consumer is not bad, but it's obviously not phenomenal, which is okay. That's kind of all we need, quite frankly, in order for this thing to not do too bad. Sales have slowed across the retail industries. Remember, we're getting to holiday season now as well. Target did have some political issues they were dealing with. It had fallen nearly 26% this year as of Tuesday's close, which is value cut by more than half since the high of the COVID pandemic. So Target, this is actually a really meaningful jump. I forgot 2023 has not been good for Target. They had the political stuff. They had the stealing, the looting, all that stuff. And Target shares were pretty down. Let's look at their chart this year. So Target was at Target was at 177. Wow. Target was at 177 in February of 2023. That was the nasty decline we saw in earnings in May. They went to 120. Then they got down to 110. Now they're at 125 in the pre-market. So they're back to their May prices, which their May prices were still pretty bad from the start of 2023, but still a much needed move for Target at 13%. When you got companies like Target doing well, after a really bad 2023, that, implies there is some momentum in this market moving a little bit higher, which is not bad at all. What did the PPI do? For those that are just joining, PPI came in much lower than expected. It came in at negative 0.05%. Market was expecting positive 0.1%. Month over month, year over year, market was expecting 1.9. It came in at 1.3. So PPI came in much lower than expected. That's also why we're seeing some market momentum come down. Now, the interesting, all right, let's do Enphase, then we'll talk about the 10-year. Enphase at $92. So Enphase was up 16.35% yesterday. And here's the question I have to the chat. Do you think the Enphase run is purely a matter of inflation being down and the expectation that rates will be cut? Or do you actually think the market's excited about Enphase? Because quite honestly, and we talked about this on Finance Junkies yesterday, I think the Enphase run is fake. I think the Enphase run is incredibly fake. I don't think that Enphase is up 16% in a day for like any good reason. I think it was a big market day. Inflation came down. Rates did not come down. Rates might come down in March, but rates did not come down. Maybe in May. We'll see what happens. But inflation came down, which is good. I don't know if that necessarily means solar demand should spike through and the $300 million of revenue that management guided for, which is 50% lower, 70% lower than what they usually do, is like something that they're still going to beat expectations on, or something that is a one-time anomaly in regards to solar financing. So I kind of am very skeptical on the Enphase run. If it comes back to 100, 130, it is the greatest comeback I've seen in the stock market, like in I think in the past couple of years. I mean, what stock has gone from 180 down to 70 and then it ends up back in the 120, 130 range? I mean, I think Enphase shareholders would be ecstatic. And meet Kevin, who has a lot of Enphase, right? In his ETF, bought the dip. You would imagine that that Enphase shareholders are really excited for that. So not sure if that's the case, but we will see until the next earnings to see what happens. A lot of you think it's only because of the interest rates, right? Yeah, seems purely macro. That's what I think. I think trying to get into Enphase right now and chasing a 16% runner, I don't think that's the case. Palantir is negative in the pre-market now, 1993. So we went from 20 down 0.08%. So Palantir a little bit negative. We see some sell side pressure on Palantir. S&P 500 also 449, down from 451. We're seeing a little bit of weakness off that face. Even Truist was 31.69. Now it's at 31. SoFi is negative in the pre-market. This is why being an equity investor is not an easy thing. It's just not. I mean, at 8 a.m., it looked like the market was hitting, we were at 450 on the S&P. It looked like the market was just like, this is the day, this is the rally, more momentum, blah, 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 PPI, yada, yada, yada. And then within an hour, we're seeing some of those gains start to fall off. Not totally, but I mean, SoFi's red. It was up 2%. Palantir's red. It was up at all-time highs or 52-week highs. Robinhood was at 869. Now it's at 854. It's like things change so instantaneously. It's why you can't really time the market. It's why you got to just let that, buy some shares and let it ride, or at least if you have options, give it a lot of time to develop, because this shit is hard, bro. It's not easy. KRE was at 45. Now it's negative. It's at 41. This is the regional banking ETF. This shit is not easy, bro. Things can just change on a dime. They can change on an absolute dime. One thing for why we might be seeing some of the equities go down is this 10-year starting to rise a little bit. We just hit 4.5 for folks. We were at 4.493 or 4.48, whatever. Now we're at 4.518, up 0.077 on the day. The reasoning behind this, this is just my naive analysis coming off of it, is that PPI and CPI is good, not enough to justify some of these valuations. And as a result of that, market's like, you know what? We're going to sell the rally. We're going to sell the news. Mike Wilson, by the way, that guy we were talking about who missed the rally this entire year, he said yesterday that the market is reacting towards short-term numbers, and that, he was basically implying the market's wrong. He was like, the market's overreacting to short-term numbers on CPI or on inflation. So you've got the Bears still having their bear case. It's not like the Bears are gone. And obviously the bear arguments still are out there for a 2024 recession, which is why I sold half my calls yesterday. I was like, you know what? The market's giving me a chance to get out of here. Let me get out of here and allocate to 2026. Get a little bit of time. Disney. Let's look at Disney. You guys are saying, good point, Kelly. What did Kelly say? Being an investor is easy. Being a trader isn't. That is true. That is true. I mean, ultimately, if you're trying to time this stuff, it's hard, which is why, again, with my options, when I felt like the 2025, what I felt about my 2025 options is I felt like I was being more of a trader than a investor, even though I know options in general is trading, not investing. But I just felt like 2025 is around the corner, Like, I don't want to wake up every day in 2024 being like, oh my God, these options are getting ready to expire. I made a philosophy. This is what I talked about on Finance Junkies last night. If I do options, I will always have at least 20 to 22 months of time away from them, right? When I initiate the position, so that I have enough time to really let that option kind of go higher if I'm correct on it, and then get out of the position. I do not want to be in options that are less than 14 months. I just don't want to be in that situation ever. So, I don't have the balls to do the weeklies or monthlies or anything like that. So being an investor is a lot easier. Being a trader is harder. And that's why you really do got to give yourself some time to let these things develop. Disney, what's going on with Disney? Wow. Disney, 92.77. Disney was at $79 last week. Activist investor Value Act has been building a stake in Disney. Chris, is this a different activist investor? Or is this the same one that put in $2.5 billion, $2.4 billion 2 weeks ago? It might be the same guy. They might be building their stake even more. That's interesting. That is very interesting, seeing Disney going up a little bit higher. Disney rallying on CNBC News about Value Act. Oh, so this is a new one. This is a new one. CNBC just reported. Let me pull that up. Wow. Yeah. There we go, folks. Disney. Who has Disney in the chat? Let me know. This is one Chris has been bullish on. I've quite honestly not been bullish on Disney at all. I could not care less for this product. Like, I just don't give a shit about Disney. But it is trading at 2014 levels, which is important to kind of think of it. So Value Act Capital, $80 a share. These guys are in. Activist commentary. Value Act has been a premier corporate governance investor for 20 years. Blah, 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 blah. They filed the 13Fs and 13Ds. I forgot. We're in 13F, 13D season. So of course this stuff is going to start coming out. We'll talk about Warren Buffett in a second, because he came out with his 13Fs yesterday. But this makes a lot of sense. So now these funds have to report what things they're in. If you're just joining, we're looking at Disney up 2% in the pre-market, up 28% in the pre-market, 1.6%, 92.58. Currently $167 billion market cap. Disney at $92. It was at $79 last week, because we have a new activist investor building a position in Disney. Value Act is getting to Disney. They're in the low 80s per share, and that is why we're seeing some momentum on Disney. Very interesting on Disney. Chris says he's got 200 call options for 2026 on Disney. Chris has a lot of options, bro. Chris, we were on the phone yesterday. He was telling me the options. I mean, Chris, obviously Verizon has been doing really well for Chris, and that one's been good. Verizon down a little bit, basically flat, 35.87, but Verizon's doing well. Disney's starting to show some life. Disney seemed dead for a while. Disney's showing a little bit of life. Truist, we'll see how that turns out. Truist now flat in the pre-market as well. So all the gains they had in the pre-market, those went away again. Just so hard to dictate how this stuff happens in the pre-market. Roy says Disney bag holder here. I think Disney fell this year. Where was Disney at? Disney was at 203 in 2021. Disney this year, start of the year, Disney was at 100. All right. So yeah, that's actually not that crazy. Wait a second. Disney was at 103. It's at 91. So when it was at 79, that was a pretty aggressive dip. But at 91, it's kind of closer to that 100 level. Maybe Disney comes back, and maybe Enphase comes back as well. That would not be that crazy. But a lot of these companies, right, we're seeing some more momentum there in terms of Disney, Palantir, Verizon, Microsoft at 370 in the pre-markets, Nvidia's at 498. Let me show you the stat on Nvidia, then we'll discuss Buffett real quick, because this Nvidia stat absolutely blew my mind yesterday when I saw it. I just didn't expect to think of this stat when I saw Nvidia. Nvidia gained $280 billion of market cap over the past week, given Nvidia was below $400. If you guys remember, it was at $398. So Nvidia was at $398, $397, And then now it's at 500. That is $280 billion in market cap. So it went from about 900 billion to 1.23 trillion. Now the question becomes, is that sustainable? It's still trading at a 47 forward PE, which is insane because you got other companies that are like 80 PE, like Palantir. They're not growing anywhere near as much as NVIDIA. So NVIDIA's growth is that insane that it's actually cheap, even though it gained $280 billion in market cap over the past couple of weeks. I mean, just absolutely incredible for NVIDIA as well. We got Darpon saying solar industry is a death sentence. Heard a lot of solar companies go under. We're going to see what happens with solar. At the end of the day, Enphase was up dramatically yesterday, and that's primarily because I believe of good inflation data. I really don't think Enphase keeps it going. Like, I really don't. And if I'm wrong, I'll happily be wrong, but I do not think that's going to keep going. And so we will see today when the market opens how we react. 5 minutes until the market opens, let's look at Warren Buffett. Buffett did some moves yesterday. We're in 13F, 13G season, so we're going to get some new reports from Granddaddy Buffett on what he ended up making as his portfolio changes. And let's see what happens. So he sold out of GM, Activision, Blizzard, Procter & Gamble, Johnson & Johnson, and a portion of HP and Chevron. So he got out of some core positions. GM, that's totally got rid of that one. Buffett changes. And so, and he started a new position in SiriusXM. And last night on Finance Junkies, we literally spent 20 minutes basically discussing, how the hell is he, like, why is he investing in SiriusXM? SiriusXM is one of those companies that's, it's an interesting company. This is what I tweeted yesterday about SiriusXM. It's an audio media company. It has 34 million monthly subscribers. It has 1.2 billion in net income, which is definitely exciting. They're growing net income about 46%, I think, year over year, which is exciting to see net income go up 46% year over year. And Howard Stern is the main show of value for the company, and it has been for years. So Howard Stern being the main store of value for the company in terms of the main draw. They also have live sports, radio, all this stuff, 34 million paying monthly subscribers. Why is Buffett interested in SiriusXM? I mean, it's a really interesting question. Now, granted, I think it's a $400 or $40 million position. I have to get the exact number right. So for Buffett, maybe his honchos, the other guys that are part of the mafia, decided to get into Sirius and he knows nothing about it. He doesn't care. But if he had his own individual perspective on SiriusXM, I think the question becomes, why is he so excited about this one? It's not like the valuation is that attractive on Sirius we were looking at last night. I mean, it's attractive, but it's not crazy. Maybe there's an acquisition target there. Maybe there's something deeper he sees in SiriusXM that he would be. Jay Kim says, Buffett dumping J&J seems huge. I thought he owned that stock for 40 years. I'm just guessing, though. I don't know if he owned it for 40 years, but it is interesting. GM, J&J, these are some of the staples of his portfolio that he's just saying goodbye to. And I guess what he's definitely raising more cash. And that's another thing. Even in the face ripper rally that we see we're having, Buffett's raising cash. And historically, Buffett has always raised cash before something crazier has happened. Right now, his current portfolio, let me show you this as well for those that want to be updated on Buffett. And then I'll show you ARK by contrast as well. Buffett right now, Apple at 50%, Bank of America at 9%, American Express 7.3%, Coca-Cola 7.1%, Chevron 5.9%, Occidental, Kraft Heinz, Moody's, Davita, everything else is 9%. So Apple and Bank of America and American Express really the majority of his portfolio. In comparison, ARK Innovation, this is her portfolio right now. Coinbase is 9.6%. That's the top. Tesla at 8.9%, Roku at 8.9%, Zoom 7.2%, UiPath, Block, etc. So you got Coinbase, Roku, Tesla, Zoom, UiPath, and then you got Kraft Heinz, Moody's, Bank of America, Apple, and American Express, right? So it's definitely two different perspectives there. Kathy Wood, when asked yesterday why she sold a crap ton of Tesla this year, she had massive sells from about 240 to 290 on Tesla. She sold a lot before Q3 earnings. She said the stock was up 150% relative to our other names, which is a fair reason, I guess, to sell the stock. And she said Elon was very concerned about the economy in the Q3 call, leading to a little bit of, I guess you would call it fear by ARK in terms of what is going to happen with the Cybertruck or Tesla writ large if Elon is scared about, or not scared, but Elon's showing some concern about the general economy. So that was her reason for why she sold out of Tesla. We'll see if that ends up proving to be true, but ultimately she had some really good sells on Tesla and she definitely took some profits this year. Tesla right now, 239 in the pre-markets. We got about 40 seconds till the market opens. PayPal, 57, Meta, 336, Palantir, 1994, flat in the pre-market. Now just read at 1993. We'll see what happens. Enphase at 92. This one we got to keep our eye on this morning and see where it goes. Bank of America is now red. JP Morgan is red. KRE is red. Verizon is red. SoFi is red. SoFi is down 1%. Apple, Amazon are up. This is going to be really interesting, folks. If you're just joining, PPI came in way lower than expected, so the market rallied about 2% in the pre-markets. Now we got 15 seconds to see if any of that momentum can sustain itself and where we think this market's going to end up at 9:30. All right, let's see. This is what we're here to do every day. See how the market performs. 890 people. Thank you all for being here. 9:30 a.m., 11:15, November 15, 2023. The stock market is once again open. Wake your ass up. Here we go. Let's see what we've got going on in the market. Amazon starts off $46.77. So we got Amazon going down just a little bit. It's green, but it's down from the pre-market. Palantir, 1993. As soon as the market opens, 1992. So it's down from 1994 yesterday. Definitely down from 20 in the pre-market. We've seen Palantir price action turn green, within a couple of minutes of the market opening, sometimes turning red. So we'll go back to Palantir, but right now is a little bit of red. Enphase continues its momentum, up 1.3%, 92.58. KRE, Regional Banking Fund, 44.64. That's up a little bit. Truist, 31.20, up 0.68%. That's up. Verizon is up. SoFi, look at that nasty decline on SoFi. What the hell is going on with SoFi? Why does it keep going down? This just doesn't make any sense. SoFi down 1.67%. Pretty much everything's green as we open the market. SoFi, look at that. Literally SoFi and SMCI. And SMCI ran yesterday, so it makes sense that SMCI is green. SoFi, it ran, but it's down 2%. Down 2% while it's green. We'll go back to SoFi. Tesla red a little bit, but Tesla's at 237, so not too red, basically flat. Target is up 13%. Disney's up 2.54%, 93.35 on Disney. S&P 450. 450 on the S&P. We are 9 points away from S&P 500 all-time high, not all-time highs, 52-week highs in August of 2023. So let's see what happens to the S&P 500. 450 is definitely a very good psychological barrier on the S&P. Meta at 336, Palantir 1995, now it's green. Enphase 92, Google 135, Snowflake 166, Datadog continuing to do well. Datadog up now almost 35% after their earnings, from 72 to 110. This is why people invest in high growth tech companies. Datadog went from 72 to 110. That, you don't get those types of returns just randomly, right? You have to pick the right asset, and you've got to, really do your due diligence and imagine that they can grow. And then Datadog had great results. So if you had Datadog, congratulations to you. Datadog also helping other SaaS companies justify some of their valuations like Snowflake and Palantir. Let's look at Bitcoin. Bitcoin is not doing what Bitcoin was doing when the market was not doing as well. So Bitcoin at 36,000, obviously way better than 24,000. So Bitcoin's done well. But it's really interesting that when the market goes up, it seems like some of these equities are getting the capital that would go into Bitcoin, Bitcoin being a store of value, and people are kind of transitioning from crypto into equities. It seems like from a at least broader macro perspective, that's why we're seeing some of the rotation into equities versus crypto. But granted, obviously Bitcoin performing amazing over the past month. It was at 27,000 like 5 weeks ago, right? So at 36,000, really good stuff, but still not continuing that momentum that we saw at 38,000. NASDAQ, I missed this yesterday. We're at 14,000 on the NASDAQ. Folks, we were at 12,500 on October 31st on the NASDAQ. You see that bottom? Is that going to be the bottom for this next bull cycle? That is the existential question. 12,543 on Halloween was the NASDAQ. Now we're at 14,150. Just absolutely incredible action on the NASDAQ. And that obviously shows that the market is showing some momentum. Affirm is up a little bit. MicroStrategy down from 505. It's at 482. So as Bitcoin comes down, MicroStrategy comes down. Sorry, MicroStrategy was actually at 535, not 505. So MicroStrategy down from 535 to 482. Obviously, volatility is the name of the game when it comes to crypto. Nvidia 495. So Nvidia's down a little bit from 499.60. It's just market's not letting it hit that 500 level, but right now at 496 on Nvidia. Tesla 238, S&P 500 450, Target 126, Disney 93.70, continuing to rally. Palantir, Palantir is being sold off. Palantir is being sold off a little bit. Now, I may be speaking too quickly because we've seen this happen like 1,000 times, then it just comes right back in an hour. But as of now, the market is selling off Palantir, and they're not letting it get to some of those levels. Let me look at my portfolio and see what I've got going on right here. Yeah, nothing too crazy. Portfolio's pretty much flat. Things are still up. It's down like $500. No move to the upside or downside. Yeah, you would think things would be going up a lot more on a day where PPI came out as low as it did, but no. Let me know what your guys' portfolios is looking like in the chat. Mine's is pretty much flat. I wonder how other people are doing with that as well. But not too much big momentum there, unless you had end phase at 72. If you had end phase at 72, then yeah, your portfolio is probably continuing to look a little bit better. What else we have? Amit, can you add Paycom? Yes, I'll add Paycom to the list. Let's actually look at this one. Paycom is a company that collapsed pretty badly last week or 2 weeks ago. Chris, if you're part of his Patreon, I know he's been doing a lot more due diligence on this. He put like a 50-page thesis on this bad boy a couple days ago that, no, Chris, I'm sorry, I love you, but I have not read yet. I will read it in a little bit, so I'll get some time. Paycom software up 2%. Obviously, we saw a pretty rough decline from 375 in July to 180. So it's probably worth doing a little bit of DD on if it goes down from 375 to 180 to see if there's any momentum there. Palantir still red. Palantir's red in a sea of green. Palantir and SoFi are red. Look at that. SoFi 732, Palantir 1985. PayPal's green, Tesla's green, Meta's green, S&P is green, Target is green, Enphase is green, JP Morgan is green, Truist, we're getting some momentum there. That's green, 31, 39. Robinhood is flat. Robinhood's red. Robinhood is red. This is incredible. Unity is red. Robinhood, SoFi, and Palantir, they're not getting a break. They're just not getting a break. HIMS is up 3% as well, so not bad for HIMS. And Netflix, again, if you got Netflix below 400, great job on that. Netflix at 458 as well. Palantir at 1990, 1988. And we'll end up seeing where it goes from there. I've got coverage calls on Palantir at 20. Hope it closes this week below that. Yeah, a lot of people, I was talking to some people yesterday. They were like, there's no way Palantir is not going to be 20 by the end of this week. There's just like no way to know. There's just no way to know. You just, we thought we were going to get a nice rally at the beginning of this open. We're not getting that crazy rally. We're not, and PPI was the catalyst for it. If you're just joining, PPI data came in negative 0.5% month over month. Market expected 0.1% positive. It came in at 1.3% year over year. Market expected 1.9% year over year. PPI was down pretty nicely on a day that comes after CPI being down pretty nicely, going from 3.7 to 3.2. So that is not enough to get that face rip rally to continue to keep going as much as we thought. TFC and some regionals recovering. I sold Disney because they did low-key dirty. Disney, again, if you're just joining as well, Disney is up 3% on the day because they had an activist investor disclose a stake. 13G season is here. And so we're going to see some finals. Look at Disney, 93, 97, inching in on 94. Disney was at 79 2 weeks ago. Yeah, and the interesting thing about activist investors, people may not know this story, but Carl Icahn, I was about to say Carl Ackman. Carl Icahn was at a dinner in 2014 with Tim Cook. They were at this dinner. The stock for Apple really wasn't moving ever since Steve Jobs passed away in 2011. And so Tim Cook was at the dinner with Carl Icahn, and he said, hey, how can we get people to buy the stock, right? There was no AirPods, the watch wasn't there, the iPad was stagnant, Macs, iPhones, no real innovation. So Tim Cook was like, dude, how do we get people to buy the stock? Carl Icahn looked him dead in the face and he said, if you buy your stock, we'll buy your stock. So he said, do some fucking buybacks. You do some buybacks, we'll buy the stock. The street will buy the stock. Apple has done $700 billion of buybacks since 2014, right? So in the past 10 years. And as a result of that, the street got excited. Now, Disney not necessarily doing buybacks, but they have these types of activist investors. Disney now $94.14, absolutely incredible, that want to see the things that you see from a Disney, which is cut costs, get your margins up, lay off workers, et cetera, potentially buy back. I don't know if Disney bought back stock this year at all, but if they're getting ready to buy back more stock, they're going to get even more activist investors excited. So if that's the case, we're going to see some momentum potentially on some of these companies that were at 2014 lows because the market is more excited for where they have to go. Let's see a bearish take. This is the market getting a little bit too excited with the latest rally. Let's see someone say why the rally is not necessarily going to last and get that perspective.
Catherine Rooney Vera, Chief Market Strategist at StoneX. Catherine, great to have you with us.
It's going to become a meme. I shouldn't have done
right. Speaking. Catherine, great to have you. What did you make of the rally yesterday? Do you believe that this rally's got legs? I mean, the 10-year yield being below 4.5 really gives a lot of runway for stocks.
It does, unless the bond yields drop is because, of course, of a rollover in the U.S. economy. So what are we really rooting for here? The U.S. economy gaining traction and remaining strong, in which case inflation could resurge. and the Fed has to hike in the future, or an economic rollover and consumption contraction, in which case the Fed would be cutting. That would not be good for equity risk premium. So at this point, I think that the markets got ahead of themselves somewhat yesterday, Melissa, and rallied significantly. The playbook being the Fed's on hold, the Fed's going to cut, buy risk, with everything you can.
Do you think that soft landing is on? Is that the foregone conclusion? That's what the markets told us yesterday. That's what consensus. If you take a look at consensus 12 months ago, I think the majority on Wall Street thought there was going to be a recession in the next 12 months, and now it's virtually zero.
Right. I think the markets are pricing in soft landing, which is historically an improbable event, historically unlikely. Next year's S&P earnings growth of 12%, I think, is probably optimistic, especially given a triple whammy of margin pressure. I think that's going to come upon corporations next year. How can they continue to expand margins when you have high energy inputs, high labor costs still out there, and high real interest rates, and nominal growth rates are probably not going to be the 5.5% that are basically baked into that 12% earnings growth. So I suspect there's going to be earnings revisions to the downside, and margin pressure will likely cause this job hoarding that we've seen post-pandemic to go away, and we could see additional job shedding. So I guess my basic point, and I kind of agree with Jamie Dimon, who yesterday talked about risk management, I think it's time to engage in counter-cyclical portfolio policy, which is at least protecting yourselves for the possibility of a stagflationary scenario or a recessionary scenario.
I don't know. I don't know if that's stagflation, really? You think we're getting stagflation assumes no growth. And I mean, there's two letters that can give you a lot of growth, and they're called A and I. And I don't know if stagflation is the biggest. That just sounds like a weird narrative to put out there. Palantir now 1991, trying to get back to that $20 level. Palantir is fighting for 20. Palantir is fighting for 20. Again, going to her point, I think there's some argument for why some of this may be more cyclical, and you have to protect yourself a little bit more. And I definitely think there are some sectors to protect yourself from. But broadly speaking, I don't know if stagflation is the reason why you would get super scared. Not buying into her argument. Yeah, it sounded like she was just talking an argument, but she didn't really believe. She's not a real bear. She doesn't really believe in what she's saying. She's just putting it out there to put it out there, maybe because she has some positions or whatever. It didn't sound convincing enough to me. Palantir 1985 again. I want Palantir to hit 20. I want it to keep going higher, but I think the market's just it's hitting a wall at 20. 20 is tough. I mean, $20 is a lot to overcome for Palantir. When we hit 20, we'll just destroy it, right? When it's really time to go past 20, just like we did with 17, 18, and 19. But it's not that easy when you're when you're flirting with 20. It's not that easy to go past it. When you're just smashing through it, it's a lot easier to keep going from there. Meta is now red on the day. Tesla 240. Regionals are back up, recovering a little bit. Truist 3150. KRE at 44. XLF 3465. Enphase, look at that, folks. Enphase at 4%. Enphase up 95. Dude, Enphase is $5 from 100. I want to see this happen because I want to see Vitaly's face when Enphase goes from 72 to 100. Like, I just want him. I want to have that conversation on Finance Junkies. That'll be super fun to see that happen. Now, granted, I think this is bullshit. I think there's no reason Enphase deserves a 20% rally in 2 days. It's up 20% in 2 days. I'm calling total bullshit. Absolute bullshit. But I don't mind. I don't mind at all seeing that bad boy go up. I have some Enphase shares, so not bad at all to kind of see it happen. But the market likes it. PPI data was good enough for the market to get excited for this. Did you see what Michael Burry said? No. Did he just tweet something? Did Michael Burry just tweet? Oh boy. Did he tweet? If someone knows what he tweeted, put it out in the chat because I would love to see. He barely tweets. So when he tweets once, he gets everyone in a frenzy if he says anything. So let's see what he did. As of his 13 Gs that are reported now, I believe Michael Burry is short NVIDIA or short as semis in general, from what I'm understanding. Let me try to pull that up real quick. Michael Burry, I believe, is no, yeah. See, I heard from a couple of people he's shorting the semiconductor sector. Yeah, he's indirectly short NVIDIA, AMD, and other semiconductors. I may be wrong on this. I have to keep tracking, but that's the news. So we'll check on that in a second. But yeah, Burry's still not bearish. He's not definitely. I mean, there's no bear that's excited about this market. There is no bear that is excited about this market right now. And as a result of that, they're probably not going to be excited for how the market is turning out in terms of this inflation data. They all probably don't even believe this inflation data as well. A couple of other things I wanted to check on. Yes, Ginkgo. Let's check on that real quick. How is Ginkgo doing? Because Kathy bought like 8 million shares in the past couple of weeks. Ginkgo's up 4%. Okay. So Ginkgo had a pretty crappy earnings. Obviously, Kathy's very excited about the stock. She has like 170 million shares. It's only up 5%. I was thinking of a little position in Ginkgo just for the hell of it. Throw like a couple $1,000 in there. But I still don't trust Ginkgo, man. This is a company that can easily become a penny stock and go out of business, or it's a company that could 20x. And so I don't know if my risk appetite is ready for that right now. If it gets to like 114, right now it's at 150. 114 is near the 52-week low. I think then it's maybe worth the risk. Kathy obviously sees something that I guess the rest of us don't. But I wanted to see if Ginkgo was getting any momentum in this rally, and Ginkgo's not getting anything. Lockheed Martin is up. Solar Edge is up 3% as well. The bottom on Solar Edge was 63. Now it's 82 on Solar Edge. So Solar Edge in Enphase is continuing to go higher as well. Kelly says, I have some Enphase shares, the share count too. Look, we don't judge people here, okay? But yeah, the share count is not as high as most people. Arnie says, I think short semi is the hedge for being long China. I forgot. Burry is long China. That is true. So yes, he is short semis. Okay, so I'm not wrong about that. You guys are confirming he is short semis. So if Burry is short semis, then basically, and again, Solar Edge up 3% with Enphase today. If Burry is short semis, then that means he believes NVIDIA is overvalued at 1.2 trillion. By the way, NVIDIA does about $35 billion of revenue, and they gained $280 billion of revenue over the past 2 weeks, 1.2 trillion. So just to give some context on how NVIDIA is. And then he's also bearish AMD at 118, AMD at a $200 billion market cap. AMD, 200 billion, NVIDIA, 1.2 trillion. Obviously, SMCI, TSMC, all those companies are affected by the semiconductor industry. The hard thing about being bearish semis, I think there's two perspectives here. Number one, you could be bearish semis on the valuation because there's a great case to make that these companies are overvalued. But I don't think you could be bearish semis the sector because we need the chips. Like we need the chips. I mean, like the Doritos, the Cheetos, like we need the chips, right? You cannot be lazy when it comes to the chips, if you know what I mean. Like we really, really need the chips. So the idea that you would be bearish the entire sector is from a demand perspective, production perspective, doesn't make sense. But bearish the valuation, yeah, that makes sense. That probably makes sense as well. Vitaly sold his soul to the devil. That's why Solar is recovering. Could you imagine Vitaly just like literally sitting down with the devil and it's like, I will give my soul to make sure Enphase comes back to life. It would be hilarious. It probably didn't happen. Maybe. We don't know. We'll see. I'll ask him about that tonight if he can join the podcast. But look, Enphase is up, folks. And Chris is going to have to eat a lot of shit if Enphase comes back to 120, because that would be hilarious if that happened. I'm going to have to eat a lot of shit too. I mean, quite frankly, I've bought into this whole solar is dead thesis. And really, it's just because rates are high. It's not because solar is like a bad industry, but rates are high. Like no one's refinancing solar at 7-8%. Like people are not doing that. And as a result of that, I've also thought the revenue guidance kind of proves the point. $300 million. Enphase is a company that was doing $800 million a quarter. Now they're going to do $300 million. Like, no, the streets are not going to give you the valuation that you historically had. S&P at 450 right now, up 0.29% on the day. Let's see if Enphase can come back. It'll be fun. Enphase up $96, 5.32%. The bulls are buying the stonk. The bulls are buying the stonk for Enphase. Target 17%. Yeah, again, if you're just coming in, Target killed it on EPS. Absolutely demolished, up 17%, 130. They're back to May 2023 levels. They were down from 173 at the beginning of the year, so they got a lot more room to run, but they are down. Palantir inching back up to 20, 1998. 1998. I was born in 1997, so Palantir is trying to get us into the 2000s. See if we can get to that $20 range. If you saw the Palantir Daily episode yesterday, we talked a lot about valuation. One of the things about Palantir is that its forward PE is higher than CrowdStrike, NVIDIA, and Microsoft. And obviously, it's not growing as fast as those companies. Microsoft growing a little bit below Palantir, but obviously Microsoft is Microsoft versus Palantir. So on a forward PE basis, price to sales basis, you could argue that Palantir is a little bit extended. I talked to two people yesterday. One person said they're DCAing and they're increasing their average on Palantir. The other person said they're trimming the crap out of their shares and that there's no way that Palantir can sustain this momentum. So we've got a lot of different perspectives here. One thing to remember is price targets on Palantir from different banks have gone up. HSBC at 21, Bank of America at 21, another bank I think at around the $20 range, some other banks at 18. There's two banks in the United States that have really bad ratings on Palantir, Citibank and RBC. Citibank, Tyler Radke, RBC, Rishi. I know these guys by names. That's how that's how invested I am in this, literally and metaphorically. And Rishi has a $5 price target. Tyler has a $10 price target. So they both think a sell. They both think Palantir is not real generative AI. They don't think Palantir has a moat, and so they have issued a sell on the stock. Everyone else, and at least the market, is disagreeing with them. And so I guess we'll see what ends up happening. But overall, the market is excited for Palantir. We can see if it can get back to this $20 momentum and maintain this. The other thing about Palantir is this NHS deal is definitely being announced. We definitely got the deal. The deal is announced. I'm convinced we got the deal. The question is when it's ultimately going to be real, right? Like when it's going to come to fruition. And so I think the market also understands that because that deal has been announced, that we should be a little bit more excited for a company like Palantir. Only Mariana is worth the name. That is correct. Mariana Perez. Love Mari. Love Mariana. Burry is shorting ticker symbol SMH, which is 20% Nvidia and 5% AMD. SMH, that's an ETF? That's a semis ETF? Let me check that right now. SMH. By the way, Arnie, did you see what Robinhood unveiled today in terms of their options simulator? It is absolutely. I'm about to put a tweet about it. It's absolutely insane what they put out today. Yeah. Okay. So this is the sector he's down. So in this sector, you've got Nvidia, Broadcom, AMD, Intel, Taiwan Semiconductor, ASML, Qualcomm, Applied Materials, and Texas Instruments. 20% of this fund is Nvidia. 5% is AMD, 4% is Intel. So year to date, look at this bad boy. Year to date, it's up 56%. Van Eck Semiconductor ETF. First time I'm hearing about this one. SMH. Shake my head. SMH. That's what I thought about when I heard it. Past 3 months, it's up 7%. Past week, it's up 5%. Past 5 years, it's up 244%. Look at the max. Oh my God. If you bought this bad boy in, 2001, I guess, whatever, but 850%. Since 2001, and over the past 5 years, 240%. So Burry is short the semis. All right, I guess Burry's bearish, as always. And we'll see where that goes from there. But Burry is indeed bearish. Your first time kidding us? I mean, I think I've heard of this ETF before, but this is the first time I'm really looking at the companies in the ETF. I have heard of it before, but first time I'm actually looking and seeing what companies they have allocation to. I don't have any semis, that's why I've never been that interested in the semis. I don't know, man. I think for me to initiate a position in the semis, I would have to get really interested in AMD and these types of companies. I think the valuations are up there and I just don't feel comfortable buying AMD at 200 billion or Nvidia 1 trillion. Definitely don't have the long-term mindset on the semis that is needed to have if you're buying at these prices. So the semis I've never really worried about. What I've worried about in the context of the semis with Nvidia coming up on November 21st is how is, for example, GPU demand influencing training of artificial intelligence model demands, which then affects companies like Palantir, Snowflake, Datadog that ultimately has to use these models in their implementation of enterprise AI software. So to me, the semis story has always been a question of how do software AI companies benefit? And that's really what Kathy was saying as well when she was asked why she sold NVIDIA. She said, we don't give a shit about NVIDIA anymore. They run up. We got it at $5 in 2014. We wrote it. Now we care about the AI software derivative companies from all that GPU demand that are going to get more returns than something like an NVIDIA. Now, she's been wrong on NVIDIA. I mean, NVIDIA is up 200% this year, so she's been wrong on that. But nonetheless, she's not excited about that. The simulator, Arnie, I'm gonna tweet it right now. Actually, I'm gonna tweet the simulator. I'll tweet it right now. The simulator, not stimulator. I just tweeted it, but I showed it in the market open like 30 minutes ago. I'm gonna show it one more time for those that don't know. New feature on Robinhood was announced, which is you can simulate my returns. As you can see right here, it's as easy as me moving the price target and me seeing different returns. I mean, this is just absolutely incredible. Absolutely crazy. For people that want to have money in Robinhood, like you can literally see if the stock goes up over time, what beta decay looks like, what the return will look like, and how it goes from there. So it's really interesting. It's really, really, really interesting. So I have 5,000 in these Robinhood call options for $20 strikes. If these bad boys go to $20 by January 2025, that $5,000 turns into $40,000. And so I can literally see the progression of how that would end up turning out. And it can either make me more cautious, make me get out of position, put more money in position, all that stuff. And so that's super, super exciting for Robinhood. OMG, this gambling tool is so cool. Okay, I didn't want to say it like that because I felt like that would be a elementary way of analyzing a new product feature by a fintech in the U.S. equity markets. But yeah, this new gambling feature is pretty damn cool. I mean, I'm not gonna lie; it's just a great feature to be looking at and seeing what's going on. So yeah, not bad at all for that. Let's get another look at some of these equities and see what we've got there. And then we'll keep going. Robinhood's still not up on the day. I mean, Robinhood cannot. Where's SoFi again? We were mad at SoFi this morning. Where's SoFi? Palantir now under 20. SoFi 728. Of course. SoFi 728. So I had a good sell yesterday. I got rid of all my SoFi options and I converted half of them to 2026 because honestly, there's two reasons. Number one, the 95% of the reason is I just didn't feel comfortable in 2024 waking up every day knowing it's going to expire soon. Now in 2024, I don't have to wake up feeling any pressure at all because I got a whole year after that if 2024 shits the bed for things to be okay. And I don't think 2024 is going to shit the bed. Even if it's flat, I think it'll be fine. So I've got a lot of time for these options to play out. So that relieved a lot of anxiety on my front. And number two, I don't like the chief risk officer selling 50% of his stake. I'm sorry. Maybe I'm making too much of a big deal out of it. Maybe I'm, but I just don't like that. And by the way, if Carp sells 100,000 shares tomorrow, I won't like that either. But I can at least understand why Carp would sell at 20 or why Sham or any of the insiders sell at 20. Like I get it. I understand. If SoFi was $15 right now, I would have no problem with the chief risk officer selling. I don't like him selling at 7 or 8 when the company's a quarter away from profitability. That's what I don't like. And so honestly, it was really bugging me out as well. So having another year to get their shit in order, that's good. Because again, if SoFi is not profitable in 2024 in terms of like maybe they miss it by a quarter or they're not profitable as much as they need to be, or they're still, the gap margins or the gap EPS not enough for the street to justify the valuation, then it can get bloody for SoFi. I mean, like SoFi is still a growth company that's very speculative at the end of the day in order for this to happen. What if SoFi is down for 2.5 years and then triples? Well, then I would be wrong on my timing. So, I mean, granted, I don't think it'll be down for 2.5 years. A growth company like SoFi shouldn't be. Like, remember, the reason why a lot of people fucked up in 2022 was because they got options in 2020 for, like, let's say you got leaps in 2020 on any stock in 2022. And you were like, okay, 2020 has been amazing. This is like a roaring 20s rally. Like, it's just going to happen. We're going to have like a shit ton of momentum. 2022, the market collapses because people didn't realize in 2020, the reason the market was going up was because of inflation. I mean, it was because of stimulus and quantitative easing. And so that's why 2022 leaps got destroyed. And to an extent, 2023 leaps got destroyed if you bought in 2021 as well. I'm buying in 2023 for 2026 now, at the end of 2023, right? We got 2 months left. My assumption, and I could be totally wrong, is that 2026 is not going to be as bad as 2022 was because we're recovering, a black swan event, all that stuff could happen, right? But we're recovering from a cataclysmic decline. Again, Facebook went from $400 to $88, right? We're recovering from that. We're getting inflation to come. Like, that recovery to me means maybe we get into a bull rally the latter half of this decade versus we are going up for meme-ish reasons in 2020, which 2020 was a meme. I mean, it was a meme. We printed $7 trillion. And as a result of that, that's why looking 2 years later, you would have to realize we have to recover from that, and that would end up hurting the broader market. So I don't know. Maybe 2026 is okay. So we will see what ends up happening from there. Let's get a little bit more of an update on where some of these positions are. So we got S&P at 449. It's down a little bit. Enphase at 94. Target at 130. Enphase again continuing to be $95, up 3% on the day. Disney, let's check on that bad boy. Disney's where Disney's at 93.83, up 3% on the day. Tesla 240, 239.90. Tesla's doing well. Meta's down a little bit. Palantir 19.95, just teetering on that $20 range. JPM is up. Bank of America's up. Truist is up. Not bad price action at all on Truist. $31.59, up 2% on the day for Truist. Microsoft, Google, Snowflake, Datadog is up. Now the question is, what's today? Today's Wednesday. We got 2 days left, Thursday and Friday. Can we actually build on this rally towards the end of the week? I think that's going to be the question. Can we actually build? Again, S&P went from 438 to 450 this week. Can we build on this rally, or does it get sold off? Does the market say, you know what? We're taking our gains and we're leaving. We had enough fun. We got to get out of here. We got stuff to do. I think we're going to see. I think we're going to see how it ends up going up from there. What else do we have here? So we talked about Warren Buffett as well. What's with Target? They had earnings today. They killed EPS by like 40 cents. absolutely phenomenal EPS. That's why Target is up. Target was also meant to be. I mean, Target was down like 40% this year. It deserved a little bit of momentum on good earnings. And so even though sales are falling on Target, Target is going up. And you know what's interesting? Bill Ackman, again, he had that tweet a couple of weeks ago that said the economy is slowing down faster than expected, and that's why he got rid of his bond short. Again, new economic data could surprise us out of nowhere in terms of where the bond market is, where the general economy is, and we could see things flip on a dime. But as of now, obviously the market is very excited for, you know, where we're seeing inflation go down. That headline inflation coming down, that is what's getting the market really, really excited at the end of the day. Let's get a little bit of an update on why the Fed is completely done raising rates and why this is probably bullish for 2024. Jonathan says, so nice to listening to this in the background in the morning. Jonathan, thanks so much for being here. Glad you're enjoying it. Here we go.
Let's check the markets. About 500 for the Dow. The S&P is above 4,500. Well, it was. It's dipped a little bit below, but nonetheless. And we're above that. Now what?
Target's under review. You know, there's a problem in putting a year-end target, not only that it's 6 weeks away, but also the internals matter here, so that, you know, I might keep the target the same place, but underneath that, you can look at these cyclicals, what they're doing today, those value stocks that I've been talking about for quite some time. They've got a lot more room to run, and they may take the ball, they may take the energy out of the tech stocks. I know it's controversial, but let me just make this point and let me make it loudly, okay? Everybody who for the last year and a half has been calling an end to this economic cycle is flat out wrong, okay? And it's time to admit that. The Fed's done. You can look at that in the Fed fund futures market. You can see that in March, they're actually pricing in cuts. You can look at the strength of the labor market. You can look at where the Atlanta Fed GDP now is. This cycle is not done, folks. And it's going to continue to expand as the Fed takes its foot off the brake, and all that infrastructure spending and supply chain onshoring goes to the cyclical sectors, goes to earth moving equipment and transportation and the industrials, goes to the financials that need to fund it, goes to the energy and material stocks that need to supply the raw materials going into all the infrastructure and factories. So look,
yo, this guy's spitting, bro. This guy's spitting hot fire right now.
I'm trying to do this with humility, but I've taken a lot of crap over the last year and a half, and so I apologize if I'm being a little punchy. I got a reason to.
Okay. I think that's fair. I think it's fair.
I would love this guy on my show, bro. I would love this guy. Like, talk your shit, bro. You got it. Keep going. Keep going. All right. Well, we'll see what ends up happening, folks. Let's take one last look at the markets. Enphase at 94, Target at 130, Disney 93.62, Nvidia down 1%, AMD down 2%, Nvidia 49, AMD 117, S&P 500 449.94, down just a little bit before that, below that 450. Palantir $20.02, hitting that $20 range again. And we got Tesla at 240.63, Palantir at $20. That's it. Let's see where the market goes. If you are just joining or just tuned in, PPI came in much lower than expected. That's why we're seeing a little bit more market momentum here. Market's excited about PPI. 10 years rising up a little bit, about 4.5. So we'll see where the 10-year ends up by the end of the day. But the market is excited about PPI coming down lower than expected, below what analysts thought, and on a second day from CPI coming in lower than expected as well, which is giving the market room to say, you know what, maybe those rates are going to come down and maybe there's a lot of room to grow in the stock market. Let's do the word of the day, and then we are done for today. Thank you all for being here. Word of the day, da capo.
Da capo.
Repeated from the beginning, used as musical direction. Da capo. I think I've heard of this word before when I used to do when I used to play trumpet in high school. Let's do a better word of the day. This one's kind of boring. Let's do a better one. Let's see. From Merriam-Webster, we have chimeria. Chimeria. This is interesting. Okay, the voice thing is not working.
Chimera.
Chimera is a fire-breathing monster that has a lion's head, a goat's body, and a snake's tail. I feel like I've heard of this one before. Chimera. Okay, this one's kind of boring though as well. Let's do another one. We need another one. Look at the word of the day on I thought the word of the day on Merriam-Webster was calendar. I was like, how's that a word of the day? All right, this one's boring, but this one's fun. Extemporaneous. Extemporaneous means spoken without preparations. The orator's performance was impressive, but only after we learned his speech was extemporaneous. Yeah, you got to be able to talk on your feet and be able to analyze the markets every day, which is what we're doing on this show. So that's it for me. Da capo is from Italian, LOL, from the beginning. Yeah, that's an interesting word. I definitely remember using that word in music classes in high school. I played the trumpet, for those that don't know, for like 4 years. And then I discovered speaking, and I became more extemporaneous in my speaking. So I went from da capo to extemporaneous. And then I discovered the equity markets, and I was like, I want to make some money. and I started investing. So that's it, folks. Hope you guys have a good day. We'll have another Daily Palantir episode coming out in a couple of hours. And Finance Junkies tonight, 7 p.m. Eastern. If you have not subscribed, let me do a quick plug for that real quick. Please, please, please subscribe to this podcast and give it a chance. I think it'll be one of the best podcasts you ever discover. I'm putting it in the chat right now. If you are new to the Market Open, or if you've been part of the Market Open for a long time, you will enjoy the show. I mean, that is a promise I can make to you. You will enjoy the show. 9 p.m. Eastern every day. 4 guys gooning out, talking about the markets. I think you'll enjoy it. And tune in today if you have not joined us before. Thank you, everybody. We will see you tomorrow on the Market Open, a little bit later for Palantir Daily, and 9 p.m. Eastern for Finance Junkies. Have a great day, everyone. Bye-bye.